Hello everyone. Today we have with us Mr. Manan Vaishnav as our guest speaker for the podcast series. Welcome to the podcast, sir. Please allow me to introduce you. Manan Vaishnav is an institutional trader currently working at Goldman Sachs, which we all know is the global leading firm when we talk about investment banking, securities, or investment management. After completing his bachelor's and master degree in economics and finance, he did an MBA program from IIM Indore. Having worked in companies like Deutsche Bank, CLSA, and Goldman Sachs for more than 15 years, he knows the industry in and out and has mastered the skills like trade execution, relationship building, client engagement, and bespoke analysis using Bloomberg and MS Excel. So, without further ado, I would like to start off this podcast with Manan Vaishnav. Welcome to the podcast.
Thanks, Siddharth. Thanks, Pranav.
Right. So, sir, to start with, can you give a brief background about yourself and what you have done in the past 15, 16 years? Yeah.
So, right from the start, I have worked in finance profiles and mostly connected to the equity markets. I started my careers doing more of analytics work rather than trading, but gradually I moved on to the front office trading roles. And over the last many years, I have been doing equity and futures and options trading in the Indian market. Uh, Yeah, roughly I have around 17 years of work experience. So that is how you can know me.
Right, sir. So, I believe without directly jumping into the entry cases, I will start with something very basic. So, what is institutional trading and how it goes in the life of institutional traders? So, could you brief about that?
Sure. Before we even start all this, let me put a disclaimer. Uh, Over here, whatever views I am expressing, they are my own individual views. They cannot be applied to any of my employers, past or present. Whatever I present over here is my own personal take on situation on things, and my own personal opinion. It cannot be attributed to any of my past or my present employers. Now, coming to the institutional sales trading, as we know, institutional sales trading is the counterparty to you is an institution. Now, what is an institution? Generally, uh, let me start by introducing what a buy side and what a sell side is, right? Buy side is typically the institutions like, say, mutual funds or alternative investment funds who pool money from different investors and who invest into the markets. Uh, Now, these people will be required to give to these people will require investment banks and the brokerages for trade execution, right? So typically there are people like me who sit on the sell side, and we service mutual funds and hedge funds and alternative investment funds, and therefore we deal with institutions, and therefore it is called as an institutional sales trading profile, right? Now, the day in the life of an institutional sales trader, it is nothing complicated, just that it starts fairly early in the morning. So I typically get up by 5ish, 5:15 in the morning, and I start reading upon what has been happening in the global markets overnight. So what has happened in Europe, in the US, and I start making small notes. I get ready in the morning. I generally leave house by what 6:45, 7 at the max, and I'm at the office by 7:30. And most of the people in the industry are in office by 7:30 a.m. Once you reach there, there is this morning meeting which goes on. In the morning meeting, typically all the analysts who cover different sectors, right? If they have any kind of research which they have come up with, or if they have any kind of update on any particular stock that they are covering, uh, plus the equity sales people who have many who get a lot of information news from the markets regarding what is happening in different kinds of stocks, right? It could be fundamental, it could be a bit technical in nature, it could just be a news update. All these people, they share their views and news on various stocks, on various sectors, and a sales trader typically would incorporate all these points into his morning note. And then by 8:30, the meeting as well as the sales note, everything is sent out. Not the meeting, but the sales note is sent out. And this provides the first talking point with the client. You can actually engage with the client starting with this note. You can piggyback on that and start discussing what is happening in the markets. And then generally one talk leads to the other. You can always pitch your sales trade idea if you have anything at that point in time. And typically the sales traders, their task is to try and get as much as face time in front of the clients, and start getting orders which they can start executing once the market begins. Once the market begins, it is for like till 3:30. You don't even get a sense of time. You don't even get to know when how time passes, because there are numerous trades which come up. There are numerous client queries which come up. You have to be very attentive to the monitors. You have to be very attentive to the trades that you are doing. There are many times instruction changes also. So you have to be very attentive with all these, because you are dealing with the clients, and you're dealing with someone else's money, right? Once the market ends, generally you would prepare a wrap of whatever has happened in the day. If there are any big flows that you have seen, you would generally let your clients know about it. And I mean, you can always send it out in the notes or footnotes. And yeah, I mean, once that happens, the day is over by around 4:30 p.m. And then you are just back home, right, to spend time with your family. So typically, this is how the a day in the life of a trader is. But generally, what happens is, once you are home, uh, you always keep getting, because you sales traders and even equity salespeople, they subscribe to a lot of news sources, right? So like say Money Control or Bloomberg, right? So all these things, they keep throwing tidbits at you. So your mind is not completely off the markets at any point in time. During the evening also, you will get one or two updates from these apps. You will keep reading about it, right? And then while you go to sleep, you process all that information and keep it ready for the next day, so to be incorporated into the note. So yeah, I mean, it is a round the clock kind of a thing. It can be intensive, but it is a very fulfilling thing to be doing.
So, okay, sir. So, what are the like skills required to? So, if let's say I or some person, some student of my age is like looking forward to get into this hedge fund industry or these equities industries and to enter as a trader's job. So, will
Hmm.
he have to like get through an analyst level job, or can he directly get a trader level job, or what are all the skill sets required that he needs, or what are the certifications that will help him like get a job at an institutional bank?
Okay, so let us break it down into profiles on the buy side and profiles on the sell side. Okay. Now, when it comes to buy side, working in the mutual funds and alternative investment funds, over there, yes, educational certifications to an extent they help, but I mean, the biggest thing is that, say for example, if someone has done XYZ course, so I'm not going to take name of any course, but someone has done XYZ course, and he's sitting somewhere in Gurgaon, or he's sitting somewhere in Ladakh. These institutional jobs are not going to come to him. He will have to be present where the actual buy side as well as the sell side exists, and that is in Mumbai. The first and the foremost condition is that the person should ideally be present in Mumbai to be able to get these jobs. Now, on the buy side, what I have seen is uh, there is a tendency for people to generally recruit, and I'm specifically talking about asset management companies, to an extent, even some alternative investment funds. Many a times, people do not. So, if you are talking about just a trader kind of a profile who basically passes on the instruction from the portfolio manager to the sell side trader, like me, right? If it is about that, and if it is about monitoring position limits, generally a postgraduate degree, from a good college would do. So you don't need to necessarily be having any sort of a certain 3 or 4 letter or 5 letter certification for that. Generally, a good college degree, which includes an MBA, that should suffice. Having said that, at the portfolio manager level, you will find people who have generally moved up the ranks from being just a trader to a portfolio manager, right? And alongside, they've also studied, and they've studied for a XYZ certification, and then they have actually got the certification, right? So if you think that just doing a certification will get you a job, that you may be disappointed. It's a combination of applying to the right places, and second thing is being present in Mumbai. That is utmost important to be on the institutional trading side. Now this was for the buy side. For the sell side, you will have typically what you will have brokerage arms of various investment banks, and you will have the domestic brokers. So in the domestic brokers also, a graduate to a postgraduate degree would typically suffice for you. Uh, on the investment bank side, and see, you will have to start at a junior most level when it comes to the local brokerages, because you will not be having any client contacts, right? So you'll have to start learning the most basic of things, like executing trades, and how to interact with the clients and understanding client requirements. That all you have to start. And it will take you a few years before you actually head to a slightly senior role, right? Most of the people, they get fed up of this, and then they eventually they either leave the industry or they try to switch jobs. Ultimately, they keep on doing the same thing, right? If you want to be in an investment bank, typically there are two ways in which you can get into an investment bank's brokerage arm. The first is that you move laterally from any other brokerage. So, say for example, I was at X bank, then I went to another brokerage house, right? And then right now I'm working somewhere else. So it's like a lateral entry. I move from one company to the other, right? The other way is that you, and again, I'm not taking the name of any institute or any college, but you graduate from the top MBA colleges, the top 4 or 5 MBA colleges in the country, because that is where typically most of the investment banks would go for placements, right? So these are the two ways in which you can land into a brokerage arm of an investment bank, right?
Right, sir.
I think you also asked about the skill sets, right, which are
Yeah,
required.
Right.
yeah.
So typically the the skill sets which are required are more of personality traits rather than just purely educational skill sets. If a person who wants to be in such kind of a job profile, he should have an ability to handle sudden workload. I mean, there could be a time wherein you are not having as many trades, and then all of a sudden there are like huge basket of trades which start coming. You could literally be overwhelmed. I mean, you are just relaxing 5 minutes back, and now suddenly you are in the thick of action. If you are not able to handle that, you will delay execution. You will lead to subpar execution. The client will not be happy with fills. These kinds of things happen. There should also be an ability to handle sustained workload. So there are times, like, say for example, if it is a budget day, or if there is any major event that is happening, right? There could be a lot of market movement, and market participants would continuously be trading, right? So at that time, you would be continuously, you'll keep getting order flows, and it can also happen that you may not even have time for any kind of bio breaks, or for just simply drinking water, right? So you should be able to handle that, and you should be able to perform in prolonged situations of stress also. You should have that ability to think quickly and act quickly, because clients will give one instruction, then suddenly they will change the instruction. Now, if you keep fumbling every now and then, it will lead to below par execution for them, right? Obviously, this calls for a good hand-eye coordination and understanding your execution systems well. And this also implies that you should have an ability to make quick calculations. So, I mean, and the art of approximation should be known. So, say for example, if a client asks you to buy, say, 500 million, asks you to buy 5 million Nifty futures, $5 million worth Nifty futures, then you should approximately understand that at a rate of 75 rupees a dollar, it means roughly 37.5 crores rupees. And then at roughly 8.5 9 lakh rupees per worth of one single Nifty contract, it means around 430 440 lots, right? So this kind of approximation you should be able to do it. Then once the trade starts, you can actually make the calculation, and then you can actually refine the numbers, right? So these are typically the skill sets which are required, and these will come with some people are like really smart. They immediately figure things out. Some people figure it out with a little bit of practice, right? So nothing of it is actually rocket science. It's just getting used to a certain situation repeatedly, and I think anyone can do it if they have their mind in the right place, and if they have that desire to learn. It is quite possible.
So like the personality traits art of discipline, art of endurance, these are the things that a person should dwell on.
Yeah, of course. So yes, you should be able to endure stress and pressure. That is like the crux of the skills. Yes.
Okay. And like since the industry is shifting from like manual trading, manual traders executing a trade to like algorithmic trading platforms. So what is like the future of this trading industry in the like years to
Algo
come?
trading is not something new. It is only now that people are realizing that this has been taking place since what, 2007, 2008, right? A few local brokers brought about electronic trading. It is called electronic trading. Okay, electronic trading. It came in India sometime around 2000, between 2006 to 2008, right? And after that, there have been many advances, many technological upgrades, but still, I mean, the voice trading, as we call, right, or the manual trading, as a layman would call, it is still thriving and it is still going on, because look, everything cannot be done by trading electronically. Say for example, if you have huge chunks of a certain stock that you want to sell, and you want to sell without an impact, if you start piling the order through electronic trading, it will start impacting the price. Correct.
Yeah.
Now, what would you do in such a case? You may use the smartest of algos, but there will be a price impact. What if you don't want a price impact? What will you do? This is my simple question to you.
Maybe like hedge with some derivatives or
Why? There's always a cost to hedge,
uh,
right? What
like
will you do?
place orders in chunks in like
That will
smaller
that will
orders.
impact. But then, say for example, if you have, say, 6 or 7 million shares, or say for example, you have like 15 to 20 million shares to do that. How many times will you do? And
Yeah.
so the simple answer is, you find the opposite side of a trade. You find someone who is, so if you are wanting to sell, you find someone who is wanting to buy, right? Ironically, that is where the brokers come into picture. So they will always have someone who knows some client who is interested in taking the opposite side of the trade. So then what does a broker do? He will just, like, two people from the broking arm, what they will do, they'll just enter opposite orders. They'll keep the orders piled up, and at the count of one, two, three, simultaneously hit the orders, and a block will be crossed on the exchange, right? There is zero price impact.
All right.
Correct. So all this
Yeah.
cannot be done by algo trading. It can be
Yeah.
done by manual trading. And second thing is, see, algo trading is a very broad term. If today there is actually no one on the street who trades without algos. Like, even the local brokerages or anyone from the investment banks, all the systems that they use, they come with algos, right? So algo trading is a very loose term. It is electronic trading, and this electronic trading can do a lot of things, but then it can also not do a lot of things. And India, as a market, it is very block heavy. So if you look, you won't have, as students, access to Bloomberg, but then if you look at bulk and block deals on BSE and NSE, right? There are files which come on a daily basis after like 5 p.m. on a daily basis. So if you look at these, you will get an idea of how many blocks are crossed. This all has to be done manually. It will not be done electronically, right?
Right.
So it is the industry is not going anywhere. Industry is here. It is here to stay.
And
Okay.
also, I was curious on what platform do this trade execute?
Everyone connects to the NSE with their own trading system. So yeah, there are multiple trading systems in the market, and
The Bloomberg terminal,
um,
I guess, is the most popular one. I in
Bloomberg is not an execution system.
That is for
It is mainly
analysts.
a communication system between the clients and the traders, the sales traders.
okay,
Yeah.
all right. And like
Got it.
Even
so,
the orders can be sent through some architecture of Bloomberg called EMS6. So yeah, I mean even the orders can be sent through Bloomberg, but then the trade actually happens on sales traders or a trader's execution systems. It doesn't happen on Bloomberg.
okay, all right. So like I was like very curious about the asset management and the like investment management industry in India. So like
Mhm.
the market cap of National Stock Exchange has surpassed that of the London Stock Exchange. So where do you see that the Indian investment and investment management industry headed to?
Indian investment management industry is, see in the recent times, and especially after the lockdowns and all, retail participation has improved. People have, despite you see that there's distress in the economy, and people are at one point in time were facing pay cuts. Despite that, if you look at the SIP inflows, they also have remained strong. So there has been a renewed interest in the equity markets, and now what we are seeing is the financialization of savings, right? So till now, people would just pile up their savings in a bank, but now they are actually beginning to because they are not really earning much when they pile up their savings in a bank. So now people are wanting better returns on whatever they are saving also, and for that matter, they are beginning to put money into the financial markets. So because of that, the AUMs of various companies as well as the number of asset management companies and alternative investment funds and the PMS, these guys have increased manifold, right? So, there was a time when the mutual fund industry in India just had like 5 to 7 asset managers, right? Or the AMCs. Now there are roughly like 44 asset management companies as per the latest data on SEBI's website. And there are roughly like 750 alternative investment funds, which have actually picked up after regulations around establishment of AIFs came about in 2013. After
13,
that,
yeah.
even AIFs have mushroomed to up to like 7 more than 750 AIFs, right? So a lot of interest is there in the Indian markets. Today, India's market is one of the most liquid derivatives market globally, right? The Nifty and the Bank Nifty, you know, index options, and especially the weekly ones, they have actually led to the volumes going through the roof in the recent times. I mean, I wouldn't be surprised. In fact, I was just some time back just doing a back of the hand calculation, and there is this section about business growth on the NSE, right? There on the website of NSE. There's this business growth in derivatives. It's a link that comes, and I just calculated roughly like we are having a notional turnover of roughly like $17 trillion in futures and in options, right? Futures and options combined
17
every month.
trillion dollars.
Yeah, 17 trillion. So I mean, the stakes are really increasing. This is not going to stop. Plus, see, when I was a kid, right, when I was in my teens, very few people actually understood equity markets. Very few people actually talked about equity markets. Now we have kids who are barely in their late teens or who are in their colleges. They are all excited about investing into the equity markets. Who want to make a long term career into equity markets. So this somewhere it has to reflect on the market performance also. somewhere it will also reflect on the innovations that will take place in this space, and somewhere that will also reflect into the growth of assets under management. So I think it's a fantastic picture as far as India is concerned.
All right, all right. So like even we both of us are like undergraduates. We are in the second year of our college. So like even we were looking how to get into the buy side of this industry, but all of these prerequisites, as you mentioned, most of the big investment banks require uh, like a degree from a top
Right.
tier 1 IIM. So I was just
And
looking for
I did
like
not say any IIM or anything. I'm just saying top tier institutes, right?
tier
Let's
one
keep
MBA
the names
colleges.
of the institute out of this.
Right. Right.
But
Sure, sure, sure.
for everyone, whoever is watching this, should be able to understand what kinds of institutes we are talking about.
Yeah. So
So I
like
was,
if
sir. Right. Go on. Please.
Siddharth, go ahead, Siddharth.
Just a curious question from my side. Like in when we talk about mutual funds, so we do not get like that kind of freedom. We have a set portfolio. We have to give to clients. But in the case of hedge funds, the traders are given full freedom to trade in derivatives or say options or whatever they want. So what kind of like instrument do traders actually prefer?
Hedge funds will also have various sub funds, just like in mutual funds we have schemes. Even in the hedge funds, there are many sub funds or sub schemes in which investors can invest. And each fund, each sub scheme or each sub fund would have something called a mandate, right? They are required to trade in a certain way using certain instruments, right? So it is not like a mutual. I mean, if it is a multi-strategy hedge fund, then they could be doing what you said. But I mean, for most part, even hedge funds, it's not like a casino out there. There are certain scheme mandates which have to be followed, and based on which your returns will be calculated. This is very necessary because I mean, how would you otherwise benchmark your returns if a person is doing a multi-strategy fund? He's a fund manager of a multi-strategy fund. His benchmark has to be his performance has to be benchmarked to a like for like fund, right? It cannot be done with a long only, right, or with a long short fund, right? That way. So just as there are various schemes in mutual fund, there are also various methodologies in hedge funds.
Okay, all right. So, like, do you
Yeah.
have any advice for students like us who are in like who are not into who are not like MBA graduates or who are not into MBA? How can students like us break into this hedge fund space or like investment management space?
So see, in hedge funds in India, they are practically called as alternative investment funds.
Alternate investment
Uh,
fund.
so there will be many AIFs, and ideally a postgraduate degree from a good college should get you at least an entry over there. Now, then how you rise up and you become a trader or a portfolio manager, that's a secondary thing. But for getting an entry, a good postgraduate degree should be the basic starting point.
All right.
Yeah, and ideally, like I said previously, most of these are based out of Mumbai. So the the better idea, the best thing to do is to just come to Mumbai. And I know it's a cold call, but that is how even I began my career, right? I did not have any job offer or anything in hand, and I just landed in Mumbai, and I started searching for jobs, and I landed on the sell side, right? So in the same way, you have to through LinkedIn, you have to get in touch with relevant people who can put you in touch with people over here in Mumbai. You have to come to Mumbai and you have to start applying intensively, right? Once you start doing that, then something will typically work.
All right, all right. So, like, is there any like kind of skill sets? Like, should we learn financial modeling? Should we learn financial valuations, or should we like pursue CFA level 1, which will improve our chances of being getting hired
No,
as
no.
a just a graduate student?
So ideally, uh, post graduation plus a knowledge of valuation, and also plus a good hand on Excel, where you can actually build models from scratch. These are the skills which are required. See, any kind of certification, once you are actually into the job, into the role, right? If the role demands it, you can actually do it. Certifications, any kind of certification, it should not be wasted. It's a bullet, right, to further your career. It should not be wasted for finding that first job. Because there are, I mean, in a country like India, there are like millions of people who are pursuing XYZ certification, right? If you look at LinkedIn feeds, you'll find every second or third person has cleared some first, second, or third level of some program, right? I mean, the LinkedIn feed is full of that. Where are all those people going to get jobs?
You even
I
posted
bet
about this thing on
exactly.
LinkedIn.
I bet that a bulk of them will not get it because they
Yeah.
are in the wrong place. They are not applying in the right places. If all this does not happen, then it is very difficult to actually land a job.
All right. Yeah.
Yeah. So first land a job by being in Mumbai and applying. It may take 6 to 8 months. It may take a year, but you will mostly, if you are persistent in your search, you will be able to get a job. And once you get a job, you can always start studying, right? Because then it will help you to rise. You can actually use that as an opportunity to rise vertically in the role and grow in the role in your own organization where you're working. Or you can actually once you complete it, you can get a you can ask for a job change based on that. And I'll tell you one more thing: completing level one of any program, it is, I mean, how does it make a difference? Because it is not a fully matured product, right? If it's on your
Yeah.
CV that you have completed level one, but how does it make a difference to me as an employer? It's not a complete thing, right?
Yeah.
So that is where it goes.
Right, sir.
Right. Right.
So could you just, like, if someone had to do a certification, so
Hmm.
could you compare CIA charter versus CFA charter?
Why? So again, my question is, why
Right,
do you have to do a certification?
Like,
right,
so basically, if we want to get an insight in this industry, as of now, we're just studying in colleges.
Boss, what you will be studying in any certification will be very different from what will actually happen in your job. No certification can teach you the kind of thought process your client is going to have as far as trading is concerned, right? See, ultimately, certifications are theoretical in nature.
Mm.
You can use them sparingly to further your career, but don't depend on them to work their magic for you. that,
Okay.
that for that job you will have to either fight for yourself, or you will have to go into a top MBA college if you want to get a college placement, campus placement, right? That is the only certification. If you are from a top B school, then it is going to work for you, because all the investment banks will come to those places and get you placed, right?
Yeah. Right.
right,
Okay,
sir.
fine. Now we were talking about the certifications. See, one certification deals in, so investments are of various types, right? Typically, uh, the world of investing is not just limited to instruments that are listed on an exchange, right? So equities and bonds and derivatives, like futures and options, they are listed on the exchange, right? So one curriculum will typically help you in understanding those instruments, what goes into evaluating the risks behind those instruments, and on a portfolio level, how would you construct a portfolio or manage a portfolio of those instruments which are listed, right? How would you value those investments? That is what the curriculum of one of the certification it talks about. The other one is about alternative investments. Now, alternative investments, you have to recognize that investments are not just listed on an exchange. There could be many investments, like, say, for example, a real estate investment, or a farmland or a timberland investment, right? Or investment into roads, tollways, highways, right? Or bridges, right? This kind of investments. How would you value them? Uh, what happens is, most of the listed instruments that we are talking about, their risk falls into the standard, mean variance framework, right? Uh, that is not very true for all the real assets or the alternative assets, right? So that is where the other curriculum it differs, and it apart from all these investments studied in this curriculum, in the first one that we talked about, the second curriculum also teaches you about the alternative investments, and then it also teaches you about uh, making investments through hedge funds, right? Or
Mm.
through commodities, right? So all these things, they are not a part of one of the most popular certifications. But as far as the alternative investments is concerned, it is actually a much wider field, and the other certification actually gives you an idea about that. So it depends completely on your interests, which exactly you want to pursue, which industry you actually want to make yourself a part of, and you can pursue it. But I mean, I have seen so many people, even without a curriculum, be a part of this industry, and I've seen many people who have literally got an alphabet soup after their name, like so X certification, Y certification, Z certification, right? You'll find so many on LinkedIn. So I saw someone who has like 8 to 10 certifications after their name, right? I don't know how it is helping them because they are not even in the investment industry. It looks good on a resume or it looks good on a LinkedIn profile, but the practical usage of all this, I don't know how much it really helps. At the base of it is a good postgraduate. If you have done that properly, you should be able to crack most of the stuff which is taught in these certifications very properly.
All right.
Right. So if someone needs to enter the space,
Hmm.
like we are in the second year, we should first focus on post graduation and then
Yes, yes, a good postgraduate.
right.
So will a master's in finance, how like if we were to compare masters in finance versus an MBA,
Hmm.
both from a tier one college, which one would like recruiters
So when you say about masters in finance, right? Where are you talking about? Are you talking about an Indian university, or are you talking from abroad?
yeah, I'm talking
Just
about tier
consider
one Indian
Indian
colleges or
context.
like Ivy League
I
universities.
think in India, an MBA rules the roost. Uh, even in masters in finance programs, a fairly little amount of campus placements actually take place, and they are certainly not at par with the kind of roles which are given to the top tier MBA colleges, right? So in India, I think an MBA would be one of the most powerful things to have on your CV, and that too not just any MBA, but from the top 4 or 5 B schools in India.
All right. So like if we were to pursue masters in finance, masters in finance in India won't be like
See, the
for
thing is, so if you pursue masters in finance, number one, it is not bad. It is not at all anything bad, right? Don't There is nothing to look down upon it. But then, what you do after doing that masters in finance, because let us assume that you will not be getting a campus placement, right? What do you do after that? That is what we have talked previously also. You should not waste time twiddling your thumbs at home, but you should move to Mumbai because that is the financial capital of India, and you have to use your alumni network, you have to use your industry linkages, you have to use your LinkedIn contacts, and then start reaching out to people. There it will definitely give you an advantage. People will recognize the value of a good master's degree over here in India also.
all right, all right. And if I pursue a master's in finance from London or from New York, I'm talking about all the good universities. So will a
Mhm.
master's in finance is an international master's in finance at par with an Indian MBA?
See, the thing is, in the Western Hemisphere, a good
Yeah.
master's is generally considered at par with an MBA. And over there is no advantage of campus placements like we have in India, right? Over there, there is placement coordination mechanism over there in most of the B schools. Like say, for example, if you're talking about London Business School, right? So it offers an MBA also. It also offers a master's in finance, right? Now over there, the if you have to apply, so over there, once you are about to complete your course, the career services will kind of give everyone a gist of what potential opportunities are available, and they'll help you prepare the CV. They'll help you, generate leads, and they'll help you. They'll give you a good recommendation, and then they will kind of help you to put your CV in the right places, right? But so over there, it is quite fungible. If you have done masters in finance or an MBA, the placement process is pretty much similar, right? That is not the case in India. In India, MBAs will have that advantage of campus placement. So it's not that I have done an MBA. That is why I am in favor of an MBA. But MBA gives you, and especially from the top 4 or 5 colleges, it gives you that real advantage of campus placement, which any regular master's degree will not provide. Right. So it is the case of what happens after the course, which actually gives you a competitive advantage vis-a-vis the others who have not done that. And once you have a good head start at a very good company in a good profile, then you tend to build up from there. So it's about having that good start and the right start, and your career could be in a different phase altogether compared to a normal masters in finance. Or in normal masters in finance, you will have to work your way up. You'll have to fight for that first job. You'll have to fight for that second job. Once you are like you've changed a couple of jobs, then people start knowing you in the industry, then things will start happening for you. But it takes there is a lag time. So if you look at it, say
And
15 years down the line, pretty much similar. The paths will
and
converge around 15 years into your career. But for the start, the MBA will have a head start.
and is this because like MBA has a wider curriculum because it covers marketing, HR, sales, finance, everything?
So
Is it because of that?
the thing is, MBA curriculums, yes, they do expose you to multiple areas, not just one area. The idea is not to go very deep down into any one particular subject. You will have a specialization, say for example in finance or so, but you will not be required to go very deep down into finance, right? Whereas in the case of certifications, you will be required to do a deep dive, right? Which is why I say that you use the first opportunity, that is an MBA, to get into a role, and then you do a deep dive and improve your chances, improve your profile, improve your standing in your current place of job, right? So that way it will give you an overall rounded career.
Right. So, sir, like both of us are doing a bachelor's in finance, especially in our college, we have good placements also. So, can we place at a firm like parent company on a private equity role? And if we are placed in that, then how we can move forward?
Private equity again is see, this is private equity is something which is not listed. Before it is listed, it is private equity, right? Once it gets listed, it becomes a public equity. It's listed on the exchange, the IPO happens, and now the shareholding of the company is public, right? So typically, if you want to be in public markets, you should try to build your career uh, from the public markets itself, because the skill sets that are required will be totally different.
God.
Also, see, you have to understand a lot of, and again, not to rain on anyone's party, but what happens is around Delhi and Gurgaon, there are a lot of KPOs of many global consulting houses, right? I'm not going to take anyone's name, but then ultimately, what these people do is bring they bring a lot of offshoring work to India, right? So what happens is you will be valuing a company, but then that company will be not domiciled in India. It will be some startup in say UK or in the US, which has to be valued, or somewhere some kind of transaction that has to be valued. So for the most of the part, what you will be doing will be doing number crunching on an Excel sheet, right? If you talk to your seniors who have been in these kinds of roles, they will be able to give you a better idea of what to expect in such roles, right? and you will generally, even they will agree that it is most of it is number crunching and PPT presentations. So I don't know how much that can help you further your career. So think about not just getting that first job, but think about what you will actually be doing on the job. Talk to different people, get different people's perspectives, and then decide what you are actually doing in the job and how it is going to help you further your career, right?
Yeah, right,
And
sir.
that is how you end up building a good career, because it is like playing a test match. It is not like playing a one day match or a T20 match. You have to slog, you have to build. I mean, the pitch can be adverse, the balls could be swinging, there could be so many yorkers, but you have to stay put. Many a times there would be bodyline bowling also by the bowlers. You will be hit, but you have to stay, you have to persist, and it is not about getting that first job and setting into a career. It is about building a career which will last you for, like, say, 25 to 30 years. So so that is how you should be looking at the whole thing. Don't look at quick fixes. if you
So for
if inherently you know that you need to do something in order to build a long term career, you should be doing it.
So, like, firstly, we need to be clear in our head whether we want to get into the private equity side or the public equity side. We're all,
Yes,
yeah,
yes.
Right.
yeah. So, like, sir, I was just both of us, like, we trade on, like, we have 1 to 2 lakhs of our portfolio. We trade in the derivative markets. Like, we can't like apply strategies with this amount of like capital. So I just had a question, like, shall we like start learning trading from like, shall we take up trading courses to like get a better chance of getting into this investment management industry? Will these trading courses help us improve our trading skills?
uh, yes, there are many trading courses which are going on. For the sake of understanding and exposure, there is no harm in trying. Again, I don't know about any one particular course. But I know that there are many on the offer. And for whatever you may feel worth, definitely, if you are a total novice, right, it will definitely give you understanding about a lot of nuances about trading. So yes, I mean, there is no harm in doing it unless you end up burning copious amounts of money, right? So obviously, you need to size up the position and how much maximum loss you are willing to take. Then you can always try. There's no harm in trying, but don't let it be a very expensive lesson. That's the only thing.
So, like, sir, we
Right,
have
sir.
had a good idea about talking to you. We had a good insight about this hedge fund space, trading,
Right.
how trading works in an institutional firm, in an institutional bank.
Right.
Right.
Just to end with one learning that you want to give to our viewers, what would be that? One life
Uh,
learning.
Life turning, I think I've not done anything where I can give such kind of advices. But the thing is, if you ask for what you want, if you genuinely seek answers, you will get those answers. So if you are clear in your mind, if you are clear in your heart about the kind of path you want to pursue, then then nothing should hold you back. If it means there is opposition from people around you, if it means that people are not agreeing to what you say, uh, fine, well and good. Be ready to lose people, or be ready to let them ultimately come around and understand your viewpoint. But if you need to stick to a ground, you have to stick to a ground, and you have to do whatever is necessary.
Right, sir. Thank you so much. It was pleasure talking to you.
Same here, same here.
Yeah,
Thanks,
yeah.
thanks again.
Th- Thank you so much, sir, for giving your time.